Today's lesson, we are going to be looking at a very important topic. A topic that, as a student preparing for WAEC, preparing for JAM, preparing for NECO or any examination that is centered on accounting, you cannot do without. It is called cashbook. I said the name is what? Cashbook. That's the name of the topic. It sounds so simple, so easy, but it's very, very important. You know, before the end of the class, you will understand the importance of this topic in accounting. Now, quickly, we are going to look at what I call lesson objective. What are we looking at? What will be our guide in our today's lesson? What are we actually planning to achieve? Number one, at the end of the lesson, we'll be able to define cashbook. We'll be able to identify the various types of cashbook, be able to explain single or one column cashbook, and we'll be able to post transaction into single or one column cashbook. And then our success criteria. How do we know? How do we measure our level of success? If at the end of the lesson we are able to define cashbook, we are able to identify the various types of cashbook, we are able to explain single or one column cashbook, and we are able to post transaction into single or one column cashbook, then we can beat our chest that we have achieved our objective. Now let's go. What do we mean by the word cashbook? What is this cashbook all about? Now, when you talk about cashbook, we are talking about the book that is used to record particulars of all money received and paid. Now, every business that is doing well must have some cash, some money with the company, probably in the purse of the company. What I mean by purse of the company is that they must have some cash with them, what we call raw cash. So when money is actually spent, when this cash is actually spent on a transaction, there is need to record the transaction. Why do we need to record? We need to record because sometimes we can forget. Some other times we can omit. So there is need to always take record of every cash that goes out of the business or the company. So the book that is used to record the particulars of the money that is received and the money that is paid is what we call the cash book. Now let me explain something. I said earlier that every company must have what we call raw cash. You know, the live wire of every business is money. There is no business that can survive without money. So if we are not careful enough to create a system or a platform where we can give account of the money that is going out and the money that we are receiving, then at the end of the day, we may not be able to measure our level of success. So cash book is that book that is used to record the particulars. What I mean by particulars is that the things, the items that are used in the transaction. Particulars are simply what we use to describe the nature of transaction, because all the transactions are not the same. A transaction may be different from the other, like sales is different from purchase. So particular is actually used to describe one transaction from another. So cash book is the book for recording particulars of all money received and paid. And then the second thing I want to explain under cash book is that cash book is called a subsidiary book. What do I mean by subsidiary book? A subsidiary book is a subset of the ledger. Is what we call it a subset of a ledger, the book of books. Now, a subsidiary book is a book of original entry. A book where transactions are recorded before they are posted to the ledger. That is what we call a subset of the ledger. So if you open your ledger, you will see cash book inside. So, but before the transactions are posted to the ledger, it must go through subsidiary books. And cash book is one of them. We have the likes of purchase day book, we have sales day book, we have return inwards day book, we have return outwards day book. These are the various subsidiary books we have. And then there's something very fundamental about cash book. Cash book is not just a subsidiary book, but it also functions as a principal book called the ledger. I have said that if you open the ledger, you will see cash book. But cash book also functions as a ledger. Why will cash book function as a ledger? Because all the transactions that are centered on cash are recorded in the cash book. So when you open the cash book, you see different classes and categories of transaction. That is why it functions, because a ledger is the book of books, book where you can find all other transactions. So when you see an account that can house other transactions, then it can be called a ledger. And cash book is the only book that serves a dual purpose. It serves as a cash book or as a subsidiary book, and also serve as a principal book called the ledger. And then, like I said before, it is the only book that combines the functions of a subsidiary book and the functions of a ledger. Now let's quickly look at the types of cash book. We have basically 4 types of cash book. Number 1, the single or 1 column cash book. Number 2, double or 2 column cash book. Number 3 is triple or 3 column cash book. And the last but not the least is the petty cash book. When we talk about single or 1 column cash book, we are talking about a cash book that has just 1 column for the amount of money involved in the transaction. When we talk about double column cash book, we have a cash book that has 2 columns for the money that is involved. Now, 2 column cash book has an extra column called the bank column, where check received and paid are posted. And then the second to the last is a triple or 3 column cash book, which has 3 columns, 1 for cash, the second is for bank, and then the last is for discount. And the last one is petty cash book, which is used for petty expenses, or what I call minor expenses. Expenses that are not significant enough to stand on their own. We group them together and open a book for them called the petty cash book. Now, in today's lesson, we want to major on single or 1 column cash book. We just want to, concentrate our attention on the single or 1 column cash book. I just gave a rundown of the types of cash book, and in my rundown I said that single or 1 column cash book is used to record cash received and payment, and it has just 1 column. Now at this point, I really want to major on what single or 1 column cash book is. First of all, don't forget that the book of original entry, which is used to record all cash receipt and payment, is what we call the cash book. But there's something I want to really explain about 1 column or 2 column cash book. I said that it has just 1 column. Normally, cash book has different columns. As you can see on the board, it has different columns. Let's assume we are opening a cash book in the name of ABC Company. A cash book of ABC Limited. Now, this is how it looks like. Now, at the middle of the cash book, you have a very thick line that is demarcating this side from this side. Now, we have the first column is called the date. The second column is called the particulars. The third column is called the folio. And then we have the next one. So you have your date here. You have your particulars here. You have your folio here. You have your folio. And then you have amount here. And that will be repeated here. Date, particulars, folio, and then amount. This will be explained further. Okay? Now, looking at this is just a sketch of how one column cash book look like. So what I mean by it has just one column, what I am saying is that this is the column for cash. This is where you write the amount of money that is involved in the transaction. The date column you write the date the transaction took place. While the particulars is used to describe the nature of the transaction. Then the folio is the column is used to record the page where this transaction can be found in the ledger. So when you have the date, the particulars, the folio, the next one is the amount. This is where you write the amount of money that is involved. That is why I said that it is usually a cash column or sometimes a bank column. Now, what I mean by usually a cash column or a bank column is that the transactions can be purely cash or it can be purely what? Bank. If the transactions are purely cash, that means there will be no cash transaction. If it is purely check, every transaction that transpired is on check. But if it is cash, that means there will be no transactions with the bank. So if it is bank, what you see is bank account of ABC or bank account for ABC Limited. But since it is cash, you said cash book, or you can also call it cash account of ABC. Now, there's something I want to say. If you see, I said that it is divided into two sides, debit and credit side. This is what we call the debit side, and this is what we call the credit side. And I said debit all cash or check received, and credit all cash or check paid. Now, if this is the debit side and this is the credit side, this debit side, every money or every transactions that bring money into the business or the company will be debited. And then any transactions that take money or check from the business will be what? Credited. So that's all you need to know as an introduction of this topic. As we make progress, we make further explanation. Now, how to post transaction into the single or one column cash book. Now, looking at the cash book here, I have explained that this first half of the book is used to record cash receipts, and then the second half of the book is used to record cash paid. So if, for instance, I say John, or I say paid salaries, 1,000 naira cash. This is a transaction. We pay salaries, 1,000 naira what? Cash. Where are we going to post this transaction, or how do we post this transaction? Let me indicate date. I said 2nd of May 2023, paid salaries, 1,000 naira cash. How do we post this transaction? Very simple. Now, the first thing you should ask yourself is that, because date is very important in accounting, date will always point out when the transaction took place. Now, 2nd of May 2023 is the date. You come under date column and you write the date. And then what did we pay? We pay salary. Now, I'm coming. Now, we cannot post this transaction here because this transaction is basically payment and money is going out of the business. So instead of you to write it here, you come over to this other side and write your 2nd of May 2023. Now, what did we pay? We paid what? Salary. How much is involved in the salary? 1,000. That's how to do. Now, if on the 10th of May 2023, let's assume we have sales of goods, 200 naira cash. 10th of May 2023, sales of goods, 200 naira cash. What happened on this day? We sold out goods. And then when the goods left us, did money enter our hand? Yes. I told you that cash book is centered on cash receipt and payment. So any transaction that bring money into the business will be debited, and then transactions that take money out of the business will be what? Credited. So what happened on the 10th of May? We sold hard goods worth 200 naira cash. So you come here and you write the date. What did we do? We had a sales. We sold hard goods. And then you write your sales, and then you write the amount 200 naira. Now somebody will ask me, what if we transact business on, and then maybe we didn't receive money instantly. We transact business on credit. Like assuming now, we sold hard goods, 200 naira credit. Are we still supposed to post it into the cash book? No. Every transaction that is not on cash or check is not qualified to be in the cash book. The cash book is basically for cash receipt and then cash payment. Now, having explained it so far, we want to quickly go to our exam guide to look at some very important and related questions from WAEC. So we'll be able to drive the message home. Okay. Now, when you click on the exam guide, you'll see what is already showing on the screen. And then our area of interest is account. That's why account is ticked already. And then when you come to year, instead of you to choose a particular year, you choose random. Because random will give you the variety of questions and questions that are related to the subject matter. And then once you choose your random, you come and then click on get started. So you click on get started, the system will generate questions that are related to what we are doing. All right, let's look at question 4. He said that use the following information to answer the question. Capital introduced by cash 50,000, bought goods for retail by cash 10,000, then bought features by cash 5,000, sold goods to Lagbaja on credit 3,000, and bought goods on credit from Tamidu 8,000. They said balance in the capital account as at 5th of January 1908 is what? See, now the capital introduced is 50,000. If you want to represent this on the cash book, let's assume we are representing this on the cash book. The capital introduced is what? The capital introduced is 50,000. So you come here, write your capital 50,000. Capital introduced is 50. And then, which other transaction took place? We bought goods for retail by cash. You come here and write purchase. What date is that? It's 2nd of January 2008. We bought goods cash. You write purchase. And how much is that? It's 10,000. And then we bought features by cash. You come here, 3rd of January. We bought features. You write features. The features, how much is there? 5,000. And then we bought, okay, I think I skipped the second transaction, which is bought goods for retail by cash. This is purchase. Okay, it's features now. Bought features by cash. That's 5,000. All right. So once you have completed this, the next thing you are going to do is to add up this side and compare. You add your credit side, and then you also add your debit side. Now, if we add our credit side, what do we have there is 15,000. We add our debit side, what do we have is 50,000. So what you do, compare this with this. You know that what we have spent is more than what we introduced into the business. So when you compare this with this, here is 50, here is 15. If you subtract 15,000 from 50, you have what? 35. So this 35,000 is the balance you have with you in your account. So to balance this now, you come down, it's a total column. This is 50,000, this is 50,000. And then when you subtract that from that, we arrive at 35,000. So your 35,000 will be here as, that's at the end of January. At the end of January, and it will have your balance carried down. Okay. And then 31st January 2008, you have your balance brought down 35,000. All right, this is how to represent the transaction on the cash book. Now, let me explain something. If you observe here, I wrote features. On the 3rd of January, I wrote features, and on the 2nd of January, I wrote purchase. The difference is that when the item that is bought is specified, then you have to write the item. But when it is not specified, like what happened on the 2nd of January, say bought goods for retail. We don't have an idea of the goods that is bought. So we just want to write purchase generally to cover up the transaction. So that's why we have features here and then we have purchase here. Now, what is it? They say balance in the capital account, 5th of January 2008. The balance that will remain there is what? 35,000. So that will be option what? Option C. All right, let's quickly look at another one. We have to choose a question. Okay, let's look at this. Use the following information to answer this question. Sold goods for cash, 50,000. Bought goods for cash, 30,000. Bought postage stamp for 5,000. Cash sales, 49,000. Cash purchase, 11,000. Pay salaries, 18,000. Total cash receipt for the period is very simple. You just look at this. You don't even need to draw the account. Just pick out the transactions that brought money into the business. And the first one, it says sold goods. The first one is April 11. Just mark them. Mark them. April 11. What happened on April 11? Well, sold goods for cash. That's 50,000. And then what again? April 20th, bought goods. That one took money away. April 26th, bought postage stamp. That one took money away. Cash 28. April 28. What happened then? Cash sales 49. 49,000. Then cash purchase took money. Pay salaries took money. So if you add this, you have what? 99,000. So our answer there is what? 99,000, which is A. Cash receipt for the month is what? Is A. Let's take one more. Okay. They say a debit balance of 1,000 in a cash account means dash. A debit balance. What we mean by a debit balance is that when you look at the debit side and the credit side, when the debit side is greater than the credit side, the balance will be on the credit side. So this is what we call the debit balance. Debit balance will always be on the credit side, while credit balance will always be on the debit side. So a debit balance indicates money we have at hand at the end of the period. So a debit balance is just the excess of receipt over what? Payment. So looking at the question, they say a debit balance of 1,000 in cash means that A, cash in hand is 1,000. Cash has been overspent. Cash. So the answer there is A, cash in hand 1,000.